Test, test, test. Okay. Hi all and welcome to another edition of Midday Market Review by TraderCast. My name is Phil and I'll be your presenter today. Let me just see that we are streaming everywhere and we can see and hear each other properly. Yes. Test. Yes, we are. So I'm going to say hi all. Hello. Okay. Hi and welcome. We have about 28 minutes ahead of US markets opening. If you're watching this for the first time, my name is Phil. I'll be your presenter today. This is what I looked like before COVID. This is what I look like now. If you're looking for a community, check out TraderCast. Brilliant. TraderCast.com. Sorry guys, I've just seen this little bit here and that's piquing my interest. Excellent. Now, where are we? If you're looking for a community, check out my TraderCast. If you're looking for the education, check out my trading skills. Some of our courses are completely free. This is a little bit about me. Over the past 10 years, I've been speaking in front of various different industry events, and I managed to speak to many people and teach them how to trade. Some of them were brand new, some of them were a little bit more experienced, and they needed the help with a specific area of their trading activity. This brings us to disclaimer. What I'm trying to do here, I'm trying to provide you with a practical application of what I think a novice trader should be able to do. So it's not advice, it's basically my experience and opinions only. And this brings us to live trades. For those of you who watched yesterday's session, you saw me trade gold. I'm just setting up another. Apologies, guys. Too many things going on here. I just made another trade. I'll tell you what I did is I'm actively looking at the Dow now as well. I have one open trade. So for those of you who watched me yesterday, you saw I was short gold from 1845.70, and I initially wanted to take my profits towards 1830. The price started moving in the right direction, and then I moved the stop loss closer to entry. I didn't take any partial profits, and then I got stopped out at a break even. I am currently short S&P from 41.18, and yet again, for those of you who watched the session yesterday, we were talking about a limit order that was waiting to be filled. So what I'll do is I'll show you that trade here. And I'll show you how I'm going to manage it and what I'm going to do with it right now. So this is where I am with S&P. So I'm currently short S&P from 41.18, and I'm looking to see if we get more downside. So low, higher low, and then this looks quite encouraging. What I'll do is I will just very quickly amend the stop and take profit, and I might be looking to take partial profits as we go along. But I'll inform you about all of that in a good time, and I'll make sure that you know exactly what I'm doing. So I am also looking at shorting Dow as well. I'm also looking at shorting Dow as well. So let me just move the stop loss. I'm going to move the stop loss just below. Yeah, good. Okay. A nice sell-off here as well in Dow. Gold is moving higher. Few things bubbling up. Okay. Let's see. Sorry. I have a couple of good positions here, and just making sure that that's all ticking along. That's all ticking along. From the economic, sorry, let me just see if there's, hi, Ion, how are you guys? Welcome back. I was really thinking about gold, that gold could possibly flush lower. There was a nice rally in crude, a breakout. I'll talk about that in a minute. But I'm looking at these indices and they are really, really looking nice here. Really looking nice. So Dow, so Nasdaq, Dow, and S&P, they're all selling off quite nicely. So let me just talk to you about S&P, because obviously that's the kind of that is the open trade. The reason for that trigger is that we have this, and when we go and check this out in a higher time frame, then obviously these clusters of the lows were support, now the resistance, and the price almost came to a 61.8 Fib retracement. These lows are quite important. If we see a loss of these lows, then potentially we could see more downside. So I'm going to put this at 40.90 just in a case, because we could see a little bounce off there for the time being. So something like this, so sell off and a little bounce. But I would likely be taking partial profits. So let me just show you the same thing now in one hourly. So high, lower high, lower high, lower high, rising wedge. You guys know that I really like these type of setups. They have the tendency to break in the direction of the prevailing trend, and this is what's happening right now. How can we trade it? Well, you would take the widest point of that consolidation and extend it down. This gives you the target, and then if you look at left, this is the cluster of the previous lows. So therefore the level that was checked in the past. So that's where I'm with S&P, and what I'll do is I will take partial profits now and move the stop loss even lower, just to make sure that that's all locked in. Let me just see if I can S&P, not gold, S&P. So here we go. That's where we are with S&P. So the current stop is below the entry, so I can move the stop loss even lower, and I will definitely take partial profits. So I don't want to close all of it, but I'll close a nice chunk, 20 contracts out of 50. Do that, and now my contract size reduced down to 30. I'm still in the money, and the stop loss is protecting my position by almost 9 points, so 8.8 points, 9 points. But I would like to see a dip lower. So the first kind of warning sign is we're getting close to this 1490. If you remember, I was saying it is possible that we could see a little bounce off there. I'll pay attention to it and see if it does that. Then I will quickly get out of this position. But I'm really happy, really happy with that. Really happy. So let's see. Gold is pushing higher. Dollar yen softer, cable slightly higher, euro dollar slightly higher, euro sterling 85.30, not doing very much. We had a bit of volatility yesterday in CAD crosses, and then I was talking to you about crude oil earlier, that we had this big spike, so I'll cover that in a minute as well. So let me just see from the economic data. Oh, I can see a few people in. Okay, cool. Nat King, Angelo, Enrique, Soy, Hamid, Rose, K, Robert, Mike, Bob, Dazio or Daccio, I don't know. A few people. Tom. Thank you guys. So if you have any questions, feel free, come in and ask. Come in. Mr. Bars, welcome. Welcome. Any questions, anything, any requests to cover anything, feel free. I would normally start with top 5 things we should know before we start trading. So let me just go and do that very quickly. OPEC Plus on oil and economic hurricane, and how to scrape by on $250,000 a year. President Joe Biden is likely to visit Saudi Arabia later this month as record high US gas prices weigh on his party's political prospects. That would almost inevitably mean he'd meet its effective ruler, Crown Prince Mohammed bin Salman, whom the president blames for the 2018 murder of the US-based columnist that was in their embassy in Turkey, if you remember. Meanwhile, there have been reports that Saudi Arabia may increase oil production. This comes just ahead of oil with that OPEC+. Well, there are some stories that, you know, they're planning to increase it anyway. Jamie Dimon warned investors to prepare for an economic hurricane as the economy struggles against the unprecedented combination of challenges, including tightening monetary policy and Russia's invasion of Ukraine. He said, "We don't know if it's a minor one or Superstorm Sandy. You better brace yourself," Diamond cautioned. But his comments appeared at odds with JP Morgan's chief market strategist, Marko Kolanovic, who wrote on the same day that there will be no recession. So here we go. Market needs bulls and bears to find a price. And it's funny that you have two people from the same institution, i.e. JP Morgan, having the opposing views. Now, the other thing that it's kind of trickling in the news, more than a third of American earnings, at least $250,000 annually, say they're living paycheck to paycheck, with more than half millennials earning 4 times the median US salary, saying they have a very little left at the end of the month. Meanwhile, the Federal Reserve is about to start shrinking its $8.9 trillion balance sheet, deploying a second tool alongside highest interest rates to curb inflation, though officials don't know just how effective it will be. So this is where we are with kind of top 5 things we should know before we start trading. We also had some economic data, ADP employment. Let me just refresh this. Just hold on a second. We had US productivity, continued jobless claims or initial jobless claims. They came in at 200,000 versus 210, so slightly lower than expected. And at 3 o'clock we have durable goods, US durable goods, and crude oil inventories at 4. Crude oil inventories at 4. Normally crude oil inventories come in on Wednesday at 3:30 my time here. But basically what happens is that because the markets were closed on Monday, they push it to Thursday in that case. So that's where we are with the crude oil. I'll talk to you about that in a bit. US Open briefing. US oil prices volatile on prospect of OPEC offsetting Russian oil output. Russia tightens grip on Ukrainian city and wraps US for supplying rockets. That's it. Really very little from the economic data. Okay. Let me just see, is there anything else worthwhile looking at? If you remember, that kind of S&P came very close, that 1490 very close to it, 40.90, a nice bouncing off it. So the other thing that can possibly happen, we could see maybe something like this as well develop. So we could see something like that for another leg lower. So that could be a tradable setup as well, like we saw it here, or maybe not here. So loss retest. This is a bit messy, but normally you would see something like this as well. So let's see. I'm in this trade. Took some money off, moved the stop loss below the entry. So my current stop is at 41.09, 41.09, which is about 9 points higher than where the price is at the moment. But that's where I am. That's where I am with S&P. That's where I am with S&P. So this is a 15-minute chart. Low, higher low, higher low, loss. The stop was initially higher, break even, below break even, partial profits taken. I'm actively looking at this 1490 possibly for another area of bounce, 4085, and then this lows 4079, 78, 79. Some more speculative traders would probably look for a deeper retracement. I'll see how it goes. I'll see how it goes. How are you, Trading Indian? Oh, silver. Okay. Okay, let's do silver. What's your take? I haven't looked at silver for a while. I had a trade on gold yesterday, but nothing in silver. So yeah, this looks like a very significant level of support. Cluster of the lows. That's the resistance. So what would I do with this? So I would be looking at this from this point. So low, lower low, lower low, lower low. That appears to be support. Yet again, this is the weekly time frame. I would also take fib from here to here, and the price retrace to 50% of fib. So it's a significant level, around 21. I didn't follow any fundamentals, so I don't really know what could trigger this. From the shorter term point of view, daily, this looks like a rising wedge. Apologies, I keep repeating rising wedge, rising. I see them everywhere. And I tend to trade them a lot, actually. With the resistance above. And I think major support down here. So this could trigger to the downside. So there is a loss of support, a retest for potentially another leg lower. Anybody who's sitting in a bearish camp would likely be looking to short sell around here, 22.15, 22.20, 22.30, anywhere around there, with a fairly tight stop above maybe 22.50, 22.60. Otherwise, if this is broken, the price will very likely move into this zone here towards 22.70, 23. Short sellers would likely be looking to take partial profits down here, i.e. a retest of these lows, 21.10 all the way down to 20.50. Alternatively, if you see a push higher and a breakout and an end of day close, above, let's do that, above, so this is broken, a retest. Okay, 1, 2 touches here, 1, 2 touches, so 4 touches, 5 touches, 6 touches, 7 touches. It's not ideal because you have a touch here and then touch here, so this could really be seen as a 2 big touches, but you need 3 solid touches for a line to become a trend line. So if we see a push higher and a breakout above these highs at 22.50 and end of day close above that level, then that could trigger something else. You could see a short squeeze and a push higher, and then in that case we could see break through here, ends here. So anyway, so that's what I'm. Sorry guys, messaging few things. Long bias, but want to see what you see and how do you think you can go medium term. So sorry, Raj. I don't know if I'm helping with this, but that's it. Happy with that S&P. Happy with that S&P. That's good. So what I'll do is I'll move my stop even lower. So the S&P partial profit taken. We're seeing further selling pressure. What I'll do is I'll move the stop loss a little bit further, locking in another 13.5 points on this trade. Really happy with this trade. Happy that we are flushing through 40.90. Now I'm eyeing these lows down here at 40.80. So we could see a little bit of a bounce there, but markets are just open, first couple of minutes. So let's see how this plays out. I am trading. Oh, I'm gonna go and do my stop. Sorry, I have a couple of other positions which are really short-term scalps, so I need to deal with that quickly. Excellent, excellent, excellent. Happy with that, happy with that, happy with that. Good, good, okay. Now, where am I now? This is good. This is good. Fast. Guys, are you looking at anything else? Sorry, I'm trying to do too many things. I'm trading on two different accounts while trying to present to you as well and engage with you, asking you questions. So let me know what you need covered, because it helps me. Any more questions? Gold is breaking out, crude oil is breaking. I was long crude, I closed it probably too soon. I was shorting gold, got stopped out on that. Not just yesterday, I actually went in short again today, just ahead of the broadcast. I was shorting here, and the reason for that was that I saw this as a rejection at the resistance, but it was a short-lived success, and then the price reversed and it stopped me out. This was actually a losing trade. I think I lost 30 or 50 points on this, I'm not really sure. But I thought we could see another leg lower. This was yesterday, so this was yet again profitable trade. And then I moved the stop loss at break even. I didn't take partial profits yesterday. I mean, I got stopped out at break even. But this looks like a breakout now, so I'm going to just leave it. I'm going to let it run. Not chasing it. Not chasing it at the moment. Dow. Buy Dow. I was actually short Dow and I got out of that position. And yet again, I was short down based on this. And apologies, I'm going to repeat the same thing again. This was a rising wedge. They have the tendency to break to the downside. There's one here. You see them over and over and over again. So I was short Dow from I was short Dow from live trade at marketplace at Wall Street 32,867. So that was my it wasn't published here because this was done on a different system. And my stop loss was initially slightly above that, and then I moved the stop loss at break even, and I didn't take partial profits because this was a scalp. I just closed everything, at exit price 32,766, so 101 points in profit I got out of that. Trading Indian, this is a basic question. I think you trade in the same way. As shown before, you know, breakout. So what I mean by that, Trading Indian is saying, how do you handle that retracement and so on? And I think I was showing this to you in silver. So from the Dow point of view, normally when you see this type of retracements, you see loss. You see a little retracement here, and then that's actually a really good entry for another leg lower. So either here for speculative traders, this for more disciplined traders. Now, if I see retracement from here to here, it's still tradable if I see a big rejection candle here. If I see a candle that looks like this, or candle that looks like this, or candle that looks like this here, I would still trade it with a tight stop. If I see a breakout above here, and then a push higher, and then a break above these highs, and then a candle, full candle closing above, then that changes the outlook. Then this becomes something else. This becomes a breakout through resistance, and off we go higher. So it's a fairly mechanical, repetitive way of looking at the markets, and it works for me, and I keep repeating it. So I'm not trying to reinvent anything new. If you don't know, maybe I can show you here. There's a course on that. It's free. You can take it if you want. It's this one. I'll show you this one. Yeah, it's free. It's free, absolutely free. It's a good course. I think it's a good course. We're getting good feedback on Trustpilot. So what is it now? 4.8. So yeah, really happy with that. Check it out. Check it out, Raj. I don't think you need it. We met on a number of occasions. You went through the kind of strategic workshops as well in London. You know your stuff. You're doing really well. Plus, you are trading with Paul, and Paul knows his stuff as well. So. You were not sharing your screen, so I don't know what you were referring to in the course. Click the link. It's here is another one, continuation. This will tell you all about price action course, free. Yeah, absolutely free. Just realized the time, guys. Sorry, I think I was trying to do too much at the same time, and hopefully you're finding this informative. See, what I'm going to do right now is I'm going to get out of my S&P trade, because I don't like the way these candles are forming. We are coming fairly close to 3 o'clock. I'm seeing a reversal in Nasdaq, and what I'll do is I'll close this completely and get out of this. Actually, no, what I'm going to do is I'm going to close another 20 here and say thank you, Mr. Market. I'm going to leave 10 contracts running with the stop at the right place. I'm going to leave it just in a case. So if I do get stopped out, I'll get stopped out for another 13 points, which is another 135 euros. But I took profits twice. Happy with this trade, really good setup, textbook setups. We talk about this all the time. Here is the rising wedge, here's the breakdown, all very good, all very straightforward. Now I'm going to leave it just in a case if I get a few more points out of this, but leaving it for now. Okay, leaving it for now. By the way, guys, I won't be able to sorry guys, I've posted the links in chat. Can you see that? Can you see it here in chat? Do you see it? No links. Guys, can you see the links in the chat? Strange. Links are not coming to the chat. Okay, apologies. Let's do this. Can you see this one? But do you see anything coming from my message? No. That's crazy. Okay, well, let me show you how to get them. Okay, so go to this website. It's called My Trading Skills. Okay. Yes, I see the message. So yeah, so message with link. Not the link, just the message. Oh, okay. Well, go to mytradingskills.com. That's the one. If you are on any other ones, they're wrong. This is the proper one. You can sign up for free if you want, and then you can go to courses, free courses, and then you can check message but no links. Okay, so go to free courses. You need to sign up. It won't cost you anything. Just sign up, and then this is the one that I'm talking about, continuation price patterns. So click on that, and it'll tell you what's covered in a course, and it has videos. So introduction, how to use them, ascending triangles, descending symmetrical, pennants and flags, cup and handle, and so on. So then you have a little knowledge check as well. So yeah, check them out. It's a video, and then there's a little editorial. It's free, absolutely free. Use it. Okay. No, thank you. Well, I introduce this at the beginning of every single session we do. So I would say, hey, if you're looking for a community, check out TraderCast. If you're looking for the education, check out My Trading Skills. Some courses are free. I keep saying it every single time. So you're more than welcome. More than welcome. Okie dokie, guys. I've just realized the time. It's 10 to 3. By the way, tomorrow is well, today is actually a bank holiday in UK, and tomorrow definitely so, beginning of the long weekend. Weather is too nice, and I won't be broadcasting tomorrow. I'm going to take a day off. We have non-farm payrolls, so the markets could be a little bit volatile, but you'll have to deal with that one without me. Over the past few months, non-farm payrolls were almost like non-events, which was really strange. Nothing really happened. Market didn't really react that much. So I'm taking a day off. I'll be back with you on Monday, the following Monday. So good luck trading, guys. Stay safe, and I'll speak to you all on Monday. Thanks for watching. Bye.